John Higgins, Mortgage One. Happy Monday. So, kind of a rough week last week with regard to interest rates. We had mentioned coming out of the last year, 2023, we were really on a roll. We had seen interest rates come down markedly from near 8% on 30-year fixed rate mortgages down below 7%. And looked like we were going to have a rate cut from the Fed as early as March. Last week really kind of threw a bucket of cold water on that whole idea. First off, we had the Federal Open Market meeting, and Fed Chairman Powell kind of threw a bucket of cold water on the ideas of a March rate cut. And then we had this just blockbuster jobs number. So I think the market was expecting 200,000 or so jobs to be created. We ended up well above 350,000. And that really put a damper on the rate cut expectations. If that wasn't enough, Chairman Powell got on 60 Minutes last night and basically threw a pool of cold water on the idea of a March rate cut. So it looks like the next move that the Fed will make certainly is going to be a lower rate. So they're going to cut at some point in time. Now that has been pushed out at least until May, maybe June. The overall, the market, as far as interest rates, does not really like this. And we've started to see the 10-year Treasury rise rapidly here. We're well above 4%, somewhere around 410, 412 on the 10-year Treasury. That doesn't translate into a massive move with regard to interest rates, but it's certainly taken the shine off the market. And where we were below 7%, now we're probably at or above it, depending on the program. So, again, nothing goes linear as far as interest rates. There's ups and downs as we move both up in rates and back down. So we'll see what transpires here over the next week or so. Not a lot of economic news out there, so more just trying to digest some of the debt that the federal government is floating this week. So we'll give you an update next week, and hopefully we consolidate here somewhere around that 4% number and not let this get out of control. Have a great week.